Welcome to today's IVG Market Blast. I'm Brad Alexander, and today we'll take a look at forex trading on Euro Kiwi, Aussie Kiwi, Kiwi Dollar, the DAX, the FTSE 100, the Russell 2000, the S&P 500, and the NASDAQ. Just a reminder that these videos are only an observation of current market conditions, and these are not to be considered as trading advice. Don't forget to like, subscribe, and keep up to date. Still, the frenzy to invest in AI and stock continues as we see the NASDAQ at all-time highs. We see the same enthusiasm in the S&P 500, with investors buying the dip a couple of weeks ago, signaled by our stochastic oscillator, which tracked the reversal perfectly. However, we see the Russell 2000 lagging behind, in fact turning down. Is this a dip buying opportunity? And why is it going in the opposite direction of the other indices? The Russell 2000 represents small cap companies in the United States, and these companies are more susceptible to interest rate fluctuations than larger companies. Also, with a stronger US dollar and higher bond yields, this always affects the Russell more than the others, so we will keep an eye on this. From the technical side, we see a falling wedge, which is usually a bullish signal. We still have bearish confluence in the stochastic oscillator, but we will keep an eye on both the fundamentals and the technicals. Speaking of indices, we see price action on the DAX forming a descending triangle and giving us a range trading opportunity along the way. If we move into a lower time frame, we see the potential with a multitude of swing highs and swing lows, many corresponding nicely with reversals of the stochastic oscillator, but I encourage you to experiment with your favorite indicators. And just like the DAX, the FTSE 100 is showing a downtrend and the stochastic oscillator is overbought and waiting to turn over to the downside. I encourage you to investigate all the global indices for similar setups. In the last couple of videos, we looked at New Zealand dollar pairs, and we see, as expected, the interest rate frenzy has calmed down and price action has reversed on Kiwi dollar. We were following a range trading opportunity last month. Then the Reserve Bank of New Zealand voted to hold rates, but by a very narrow margin. This signaled to the market that we may see a rate rise soon, and the New Zealand dollar flew. As usual, when the dust settled and our technical indicators gave us a clue, the reversal was a great trade. Now, we may see price action wanting to continue the uptrend. Be careful though, as we have some important U.S. economic news this week and we expect volatility. We will look at the U.S. non-farm payroll report and the Canadian employment in our next video on Thursday. You will find similar price action on almost all New Zealand dollar pair charts, including Aussie Kiwi and Euro Kiwi. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.